how do you interpret today's numbers? What's the Bloomberg Economics house view?
Yeah, thank you. I think today's inflation is overall weaker than our expectation. The CPI is lower than the consensus, and the PPI fall deeper in deflation. We think that the CPI released important signals to us as that how the recovery is going. And actually, when we are talking about the recovery in China, we actually are talking about the demand side recovery, in particular households consumption. But today's data tells us that, yes, we have seen some recovery in the items related to travel and catering or something like this. But if we look at the bigger picture, we would find that the demand for durable goods and the cars and the services items other than travel and the catering are still weak. This tells us that the recovery in the consumption still has a way to go, and that is why we think that the PBOC still has the room and the pressure to cover it further in the coming months or month or two.
Well, let's just talk about that. In terms of these suboptimal readings suggesting a much more uneven recovery, what kind of response will the PBOC deliver?
As we cite that, we have been calling for a PBOC rate cut in the second quarter. And today's data site raises the chance and reinforces our view. And this is not only because of the inflation itself, it also because of the background, as we cite that it reflects a soft in consumption. And also, if we look at the PPI, the deflation in PPI actually means the pressure for the downward pressure for enterprises' profitability because of the high correlation between the two. So that for a central bank, if you are facing a soft inflation and still soft consumption and also the downward pressure on the profitability, the natural action, the reaction is to ease the monetary policy, right? So that is why we are calling for the rate cut in the near future.